We are live, are we? Indeed we are. Good evening, my beautiful family. What is going on with ya? As always, come on in, make yourself comfortable because it's Friday and you are here live with your favorite uncle cousin. So happy to be before you. As always, let me check the tech, make sure we're good. Enjoy music while I'm getting this all situated because tonight we're talking about getting you ready for tax season 2022. Hope y'all ready for that. Check one thing here. There we go. All right, should be good. My man Zach, what's going on, boss? You are in the building. Always a pleasure to see you, man. Always super excited to have you here. Let's get to it, Zach. I got your message that you got my message, so we good to go. So immediately after this, be looking at your inbox, man, because I'm gonna send you some more things should be coming your way. So immediately after we end this session, make sure, not immediately, right? I guess I gotta break down and do all this other stuff, but probably within 30 minutes after we end this live, Zach, check your inbox. Something should be in there for you. We should be good to go. Man, how was everybody's week? T-Town. Oh man, Big Tim in the building. Tim, I'm excited for Monday. And I'm nervous too. Because your man said y'all gonna be bringing the heat on Monday. So I feel like I'm gonna have to go break out my tax book and study up just to make sure. Because the way that he said that, like, boy, y'all about to give it to me on Monday. But can we, is that Tim, I'm asking for you, man, is that gonna be like a private thing on Monday? Or is that something like we can maybe leave it, put like a link here in the show notes or something like that and share it out to everybody in case they want to join it? Because Tim has invited me on to be a guest on his show that he has for people in the tent world. So it's definitely going to be interesting, man. I appreciate Tim always keeping me top of mind, man. So, shout out to him for that because he's awesome for keeping me top of mind to help educate the community, his community. Super excited to be there come Monday. So, Tim like that. He said everybody is invited, man. So, Tim, I don't know if you can probably share a link that I can put out here that everybody can see, that we can put somewhere in the show notes maybe, and I can pin it to the top for Monday. If everybody's invited, they can come here. Shawnee says, good evening, like-minded people. Well, good evening, welcome. That look like a new face, so if you're new here, appreciate you being here. Welcome to all the like-minded people, indeed. So yes, man, how was everybody's week been? Y'all got to let me know. It's Friday. How was Monday through, well, it's Friday evening, so how was Monday through Friday for you? Everybody ready for the holidays? Are y'all ready for this? Like, man, I love this season. I love the eggnog. I love the lights. I love the music. I love the energy, the atmosphere, the joy, the just driving through the neighborhoods and everybody got their lights up, man. Like, this is definitely one of my favorite seasons. But at the same time, let me say this. And I'm going to say this with all seriousness too, right? Like, this is a lot of joy happening this season. I'm probably want to repeat this at the end for everybody who may catch it at the end, but in as much as there's a lot of joy happening right now, there's also a lot of sadness and sorrow. So make sure that we check in on people during this time. This is around the time a lot of people have lost their loved ones during the holidays, so it may be difficult for them. A lot of people are struggling financially, right? So it may be difficult for them. Some people just may just be having a hard time with this season. Like I know, like I said, for me, I love it. I enjoy it. It's great for me, but I know there's a lot of people that's on the opposite of that spectrum. So man, make sure you reach out to your family members, your boy, your girl, your friends whom you haven't spoke to in a while. Just check in on their mental health. Make sure they're good, right? Because if I'm not mistaken, this season right here is also the season where there's the highest suicide rates that happen during this time, because of the other side of joy is that deep down emotion, that deep depression. And sometimes all it takes is just a phone call. A simple phone call to be like, hey, just checking in on you was good. Even if you text, people are used to texting, you ain't got to send out a mass text, but just write a text, say, hey, just checking in on you. Send out to some people you haven't heard from in a while, and make sure that they good, right? So, yeah, let's see what else you say. Tim says that it is posted on his channel. It will go live from the tent YouTube and this page. Okay, it's coming on it now. I'll see if I can grab it and email it, and you can share. Yes, if you can definitely email it to me, I'll be more than happy to share it out for sure. So let me go ahead. I'm going to skip tonight because we're going to talk about taxes tonight and getting everything up for tax preparation. I'm going to get this over here so we'll be good. Doing things a little bit differently, no PowerPoint, but I am going to show the forms, right? So I definitely want to make sure that that's out here. So I want to get all of this together. Yes. All right. Got that one. Make sure I got that one so we can see that. Other taxes and credits. Okay. Yeah. Got all the tax forms up. The last time I actually went through, what is that? A tax return. Ooh, man. Excuse me. Yeah, that cough is still lingering, man. Oh, I don't know what I'm going to do. Then I'll get rid of this. I've been drinking my teas. Speaking of, Tim, man, shout out to you. I didn't even get a chance last week. I had the end button. I went back and I looked and I saw that you had sent your boy a super chat. I appreciate that. Thank you for that. I took your advice. I went and bought me some tea and some stuff, and I was cool, but I don't know, I guess this cold weather here in Cali, man, it still just got this lingering cough. And it's funny, I don't know how it is everywhere else, but out here in Cali, there's a shortage of cough medicine. There is a shortage of everything here as far as when we go in our CVS and Walgreens, we go to that cold section and the shelves is empty. So I don't know if California is going to be the catalyst and this is going to travel eastward, but if y'all think y'all may need something and y'all don't have a shortage, I was just stocking up on it now. Get that going. All right. Let's see who else. Oh, Miss Brown, I see you. I thank you. Says that the logo is great. Yes, one of my many t-shirt logos I appreciate there. One of these days I'm going to go ahead and sell the merch because I created these shirts for us. That's why it says the self-employed, because these shirts represent the self-employed. And this right here is what I call just a humble brag. It's just work. What we do, it ain't nothing special. It ain't nothing, spectacular. What the self-employed do is just work. So I'm thinking maybe next year, come January, I'm going to make these shirts available as merch and anybody can get them. I don't know how I'm going to do that. Maybe Tim will help me set that up, or somebody, Zach, one of these great t-shirt guys that's on here going to help me get this set up. I'm going to set up a store. We can go from there. So indeed. So tonight, taxes. But for those of you who may be new, let me get the introductions out the way because I just been sitting up here talking. My title's on one of these buttons. Here it is. For those of you who may not know me, my name is Tyrone Gregory. I am the self-employed tax guy also effectively known in our community as your favorite Uncle Cousin. And what my goal here is to simply teach the self-employed community how to be successfully self-employed by really showing them, taking them to the finish line, taking them past the finish line. I know a lot of things on social media is going to tell you do this, this, and the other. Like for those of you who may have saw my post, what was it? Did I post it yesterday? The day before yesterday about how to write off the Lamborghinis, the G-Wagons, how to write off and this. And the only reason I posted that was because, like I said, I was scrolling through and got notification that somebody was going live, and I was like, well, let me see what they talking about. And so there was like, the title was how to write off a Lamborghini. And I'm like, all right, cool. Let me see what they said. And what got me is they said that in order to write off the Lamborghini, one, you have to buy it. So if you can afford to buy it, go right ahead. One, you have to buy it. Then once you buy it, take pictures with it, use it in your video content, put it on Turo, and now it becomes a business use, and therefore you get to write it off and depreciate it, do a section 179 because it weighs over 6,000 pounds. And I'm like, that's not the whole truth. Not saying that that individual was lying, because that is true, right? Like, that gives it a business purpose, because as the IRS says, in order to deduct something, it has to have a business purpose. So if you're using it in your content for your business, then that gives it a business purpose. But on the other side, in order for the IRS to accept it as a deductible expense, you have to keep track of the miles. Like, you can't buy the Lamborghini, park it in your garage, take pictures with it, take videos around it, and then at the end of the year be like, all right, I'm writing it off. No, like, the IRS is going to say, well, how do we know what percentage of it was business, what percentage of it was personal, right? So you have to track the miles. You have to track miles, and I've said this like a million times. I guess I have to say it a million more. You need to know the beginning miles, which I'm gonna tell y'all now. Put a reminder in your phone's calendar, right? Go to your calendar app right now. Go to the calendar app right now. No, let me go back. Go to your calendar app right now. Here's mine, right? You see there's really a bunch of stuff on there. Go to your calendar app right now and set on January 1st, which is a Sunday. Put a note there, put a reminder to write down your vehicle's odometer reading. Whatever the number is on January 1st, write down that number on your odometer. Do that. Put a reminder on your phone right now. Take a break from this live to go to your calendar on your phone or wherever you are and put a reminder. Get vehicle odometer reading or note mileage, whatever you want to put on there. You just want to note that you need to take a note of your mileage log. All right, Tim just said he emailed it to me, so hold on, y'all. Let me go grab my email real quick so I can post the link to the live we got going on Monday. There's going to be some tax Q&A, I'm assuming there. Give me 1 second. Hold on, Tim. I do not see. Let me check my spam. Tim, I'm not seeing it in my email, guys. So can you confirm which email you sent it to? Or maybe there's a delay. I'll keep an eye out on the email. Maybe it'll come at some point, and if it get here before that live goes on, I'll make sure that I kind copy and post it because I'm not seeing the email coming just yet. But, you know, technology, servers slow and all that good stuff. So, yeah, we'll definitely check it out. And he said he sent it to the uncle cousin email. Okay, well, we'll see. Maybe that just server is just slow. So I'll keep an eye out for it as we go. Okie dokie. All right, so let's get busy because I don't want to be before y'all long. Y'all know when it comes to taxes, man, there's a lot to talk about. So first things first, when it comes to taxes, the goal is to not owe them and have them not owe you. I know a lot of people love getting refunds. And y'all know refunds, in my opinion, suck. I get it. I mean, you know, if the government is going to give money, by all means, I understand it. It's your take it. But if we think about the idea of what a refund means, right? Like if you're getting a refund, let me say the first scenario, if you're getting a refund because you're a high earner, you work a regular W-2 job or you're self-employed and you pay quarterly estimated taxes, if you get a refund, that means you overpaid the government, right? Which technically means that you're not managing your finances the way you should, because you should be able to say, hey, I know that at the end of the year, I'm only going to owe X amount of dollars, so I should only pay X amount of dollars. Because think about that, if you got a $5,000 refund from just your regular W-2 job, that's $5,000 that you gave the government throughout the year that you could have had yourself to invest in something and make that 5,000 turn into 10, make that 10 turn into 20, you know, compounding that entrepreneurial math, right? That's what you could have done with that. That's why I have a problem with refunds. That was scenario one. Scenario two, if you're getting a refund, that means that you are below, or should I say at or below the federal poverty level. And I want you to, when you get your spare time, go look that up. There is, our government says, hey, depending on the size of the family, if you make less than a certain amount, you're considered to be in poverty. And so think about what our government is doing for their homeboys in corporate America. When they're giving out these tax credits for people who are in the poverty level, they're only giving you that money so you can go spend it with these other corporate giants. That's really what it boils down to. These are economic credits. And when we talk about the economy is a series of transactions. People are buying and selling to each other all the time. So they're giving you money because you don't have enough money of your own to go spend it. Hopefully, some people may change their mind this year, say, you know what, if I get a refund, I'm going to take that refund and invest it. Not just spend it, but invest it. So I'm starting with that. Refunds suck. I'm just putting it out there. I'm not a fan of people receiving refunds because of what they represent. An overpayment, if you're a regular W-2 or employee, you overpaid, you got money back. Or if you are in poverty, then they're giving you money to help you spend to stimulate the economy. So terrible, especially the last one. If you are in poverty and you're getting a refund because you're in poverty, you should make a goal to not be in poverty no more. So take this refund, invest it so you get out of poverty and you're not in poverty no more. So let's start there. All right. So now what I want to do, I'm going to flip over to the screen here and share my desktop and look at this 1040. Let me blow it up a little bit here, actually, so we can see. So here is the most recent tax return. You can see it's the 2022, right? We see that right here because the 2023 tax returns have not actually been released as of yet. We'll probably see those closer to around January 16th when the e-file opens up. So I kind of just pre-filled it out. What I want to do is, again, to me, the goal for us is to first understand how the tax return works. I want us to understand how it flows, like what happens when this happens, because the tax return is not all about math. A tax return is literally if this, then that. IFTT. That's what a tax return was. When I was teaching taxes for one of the big box retailers, one of the biggest fears and challenges, people are like, oh my God, I'm not good at math. I ain't gonna be able to learn this. And I'm like, the math is easy. The math is simple addition and subtraction, right? Like, so if you know how to add and subtract, you can follow the math on a tax return. The challenging part of a tax return, which is why a lot of tax preparers charge so much, is because of the laws that's involved that says, if this scenario, and you'll see this as we go through it, if this is this, then you have to do that, right? Like if you are over this age, then you add this. If you're under this age, you subtract it. Like that's what happens a lot of time in taxes, not the math. So my goal tonight, and we're going to carry this through the end of the year, is to first acclimate you to a tax return. So when you're looking at your tax return, you understand exactly what is happening, because the goal is once you know what's happening, you can control what is happening. You can predict what is happening. You can plan for what is happening, but you first have to know, right? So that's what the goal for tonight is. So let's kind of go through this here. For the most part, starting here at the top, you notice here's your filing status. And for this scenario, I picked somebody who's single, no dependents. And again, because I get a lot of people, well, can I get a scenario about, having one child or having 15 children, or if I'm married or what? Different scenario. The reason I start with single is because single is the highest tax bracket, right? So if we start here, anything that happens under there is just going to reduce that number, right? So I always start with single because it is the highest amount. If you add a child, that amount goes down. If you get married, that amount goes down, but single is always going to be at the top, right? So we see here we have the filing status at the top, and you can see there are 5 to choose from. So you can either be married, married filing joint, married filing separately, head of household, and what is called the qualifying widower or spouse right here. Okay. And each one should be self-explanatory. If you're married, you're filing joint. And let me put this out here as well. When you are married, when you are legally married, not all states except common law marriage, find out if your state does. But when you are married, you only have 2.5. I'm going to say 2.5 choices. Married filing joint or married filing separate. Understand that. Now, this is where a lot of people get confused. They get married and be like, you know what? I'm still going to file separate. Let me break this down. I have a video on it. It's called Love and Taxes. If y'all are curious, you can go watch it. When you are married, you have 2 choices. Married filing joint or married filing separately. The 0.5 option is head of household. But in order to file head of household, you must have lived apart separately for the last 6 months of the year, and you have to have a dependent. So that last part was important. You must have lived apart for the last 6 months of the year. So if you are still technically married on paper, okay, if you are married on paper and you still live with your spouse or significant other on, let's see, 6 months, that would be June. So I'm going to say if on July 1st, y'all still live together, you don't qualify for head of household. Understand that, right? The last 6 months of the year, you cannot live apart. I mean, you cannot live together. So you have until June 30th to make a decision whether y'all gonna do joint head of household or something. Because come July 1st, if you're there on July 1st, automatically disqualified. Okay, that's what I'm talking about. The if this, then that. These are the very particular rules and details that we as tax professionals have to memorize and know, because that's why we ask questions. Are you married? Yeah, okay. Did y'all live apart? Okay, when did you move out? Because we have to know that date. July 1st. Don't count for nothing else. All right, so let me get back to it. So we got that. We got the filing statuses across the top. The second section here is pretty much self-explanatory. Your first name, last name, social security number. If you're doing married, filing joint, your spouse's information will be here as well. Your address will be here, and we're good to go. So this box right here, this section has always been a mystery to me. Okay, if we need, it shows that if you wish to donate $3 to the presidential election campaign fund, then you can check a box. And here's the thing, that's $3 is not coming from you. Okay? Now the presidential election campaign fund, because here in America, anybody can run for president. And there's a campaign fund that you can dip into to help pay for your campaign, to help pay for the advertisement, the flyers, and all the traveling you got to do. There's a campaign fund that you can dip into. And if you, as a U.S. patriotic citizen, want to donate $3 to that fund, you can do so. But again, I don't know where that $3 come from, because it doesn't come out of your refund. It doesn't add to your taxes. So they just magically pull it from somewhere and put it there. So if you check that box, that's what happens. Nothing outside of that, okay? But if you notice the next line here, digital assets, this has to do with the cryptocurrency. Remember, the IRS wants to know. And if we look at here, let me blow it up a little bit more if I can. At any time, I want us to be able to read this. At any time during 2022, did you receive, either as a reward, award, payment for property or service, or sale, right, exchange, gift, or otherwise dispose of a digital asset or financial interest in a digital asset? You have to check yes or no in this box right here for that particular question. IRS, they ain't playing with y'all. They want to know, have you received any kind of, whether it's NFT, whether it's a Dogecoin, or any other kind of digital asset, cryptocurrency, you have to let them know. Okay? That was what the whole big thing was about there for them. Then there's the standard deduction right here. We're going under it. There's the standard deduction. And it says, can somebody claim you? Because if somebody can claim you as a dependent, you will check this box. And here's for my parents out here. If your child works, they still can file their own tax return and still be claimed by you as a dependent. All they have to do is check this box that says, I am a dependent of somebody else. Once this box is checked, it converts the return to a dependent tax return. I know a lot of people are confused because they like, well, I didn't want to claim my child because they worked. They got them a little summer job. They made some money. Listen, as long as they made under the standard deduction, they're not going to have no taxes to pay as a dependent, right? So you would check that box if somebody else can claim you. If we're doing separate returns, you would check here if your spouse is itemizing, but that's just for the standard deduction. Scrolling down here, we got the age and blindness under the standard deduction. So if you were born, keyword here, before January 2nd, 1958, you would check this box. If you are legally blind, this doesn't mean you have to be like totally blind, but if you have been considered legally blind by your doctor, you would check this box here, and you would do the same for your spouse. Now, this is important, and we'll see this as we go down to the standard deduction. But if you were to check any of them boxes, you would get an additional amount added to your standard deduction. And we're going to see why the standard deduction is important as we move forward. Okay, so now we scroll down here at the top. Let me make it big. Here at the top is where you list your dependents. So there's room for 1, 2, 3, 4 dependents, but you're not limited to writing down 4 dependents. If you got 50 dependents, you would just check this box and write it down on a separate sheet of paper. But the information needs to be the same. We need their first name, last name, we need their social security number, and the relationship. And the relationship is going to be either son, daughter, grandchild, niece, nephew, parents. You can claim your parents if you are taking care of that household. What else? You can claim everything except cousin. Let me say that. Cousins don't count for purposes of relationship. They can go in as other, right? You can actually claim other, like you can claim your friends if they live with you all year. Okay? Now this is important. If they live with you all year, 365 days, that individual had to live with you and they had to have made less than $4,000. I think that's the number. It was 435 or something like, but less than $4,000, live with you all year, you can claim your broke homies. Just saying, putting it out there. Okay. You want to check this box if the child is under the age 17. Again, under age 17. I don't know why the IRS just don't say 16 and under, but as long as they're under the age 17, they qualify for the child tax credit. If they're over that, they may qualify for the other dependent credit. So you would check that box right here. All right. So now let's go to the fun. Okay. And if there's any questions, if I'm going too fast, y'all by all means, let me know, put it in the chat. I'm going to take a break, get to the questions before the end is over. So here we are at the income section. Now I'm going to put this, zoom this back on the screen because I want y'all to really see this part. So this is where we have fun at. As you can see, the income section, it goes from 1 all the way down to 9. Okay. These boxes here from 1 all the way to 9 is the income section of the tax return. This is everything that you earn is going to be reported here. So all of your, and here's the thing. Here is the thing. Everybody in the U.S. files the same exact form. Okay? We all, and when I say we all, I am including Jeff Bezos. I am including Donald Trump, who obviously has been, y'all seen the post. The Donald Trump Corporation has been found guilty on 17 counts of tax fraud. So I'm sure his look a little different, but we all, Warren Buffett, right? Anybody that you can think of that's rich, Oprah Winfrey, Grant Cardone, whomever, they all file this form. I want to put that, I just want to make that known because there is nothing, whatever they can do, we can do because we're all using the same form. All right. So this form here, we have the W-2 income. That's going to be box 1. For those of us who just work at W-2, if there's any household employees, meaning that like if you have butlers, maids, things like that live and you work with them, you pay them, that gets reported there. Tip income for those who work in the server industry, you have that there. Medicare payments, this is like for IHSS, people who may receive IHSS that hasn't been reported. Dependent care benefits, line E is a very tricky one for those of you who got a W-2 job and you have kids and you have a flexible savings account or something where you receive payments to pay for childcare, but you don't actually pay the child care because we don't get the dependent care form from the child care provider. Those payments you receive get treated as income and it goes right there on line 1E. Okay. If you get adoption benefits, You know, so then if we look at line G, we're going to add everything from our wages up here on line G. Again, notice, very simple math. At this point, we're just adding. We're not doing no trigonometry, no calculus or anything like that. Just simple math, adding. Other earned income. So when it comes to other, like we can, when it says see instructions, it's really just going to have us go to this form here, the Schedule 1. And as you can see, the title of it is additional income. So when it comes to the taxes, let me put this out here. For us to fill in line H, right, other earned income, we're going to go to another schedule for additional income. And you can see what that is here. Taxable refunds, alimony received. There's, you know, here's where we have our gains and losses from selling property. Line 3 is our business income, and we have to put that on Schedule C. We'll talk about Schedule C expenses next week. We have rental real estate. If you owe McDonald and you had a farm, your unemployment. If we had NOLs, like this right here, line 8A, the net operating loss. This is what Trump did. This is, like I say, we filed the same forms. That right there, line 8A, if you were keeping up on the whole Trump thing, he had to release his personal tax return, and he had billions of dollars of losses from 10 years ago, where every time it carried forward, it got reported right there on line 8A, the net operating loss, which wipes out other income. It shows up as a negative number. But these are all the other things that is considered additional income, and we give it a grand total right here. And you see it said combine lines 1 through 7, enter here, and on Form 1040 line 8. So once we have a number here, it will then carry over right here, okay? So other income, we good. I don't want to go through every single line for sake of time because we're already getting close, but that's the income. And for purposes of this, I'm going to put a number here so we can see. So follow me. Let's just say somebody earned 100,000. No other income, right? So we're going to put that right there on line 9 because that's the total income. But we can see what types of income are available. Interest, dividends, IRA distributions, pensions and annuities, Social Security, capital gains or loss. This is for my people who like to invest in the stocks. Anything goes there. Here's again other income from lines from Schedule 1. And then we have line 9. We add everything up. So if I had anything additional between here and there, I'm going to add it and put it here. But because I'm not, or because I don't, we just carry the number down. Again, we're seeing how this flows. And the reason I want you to know how this flows is so when you look at your tax return, you have to look at your tax return. Don't just accept what's given to you. Look at your tax return, review it, make sure that everything is good. That's why I'm showing you this here. All right, just know that. So this is this scenario for somebody who's working. We're gonna get to the self-employed next week. So for those of you who have just a regular W-2 job, your W-2 wages are going to be reported here. This person made 100,000. No other income to report. So we bring it down here to total income. All right. So that goes right there. Let me get this right. Total income. Boom. Line 9. Perfect. Adjustments. Now here's where we can have a lot of fun too. What are some of the adjustments to income? Okay. Again, it says from Schedule 1, because if we go back to Schedule 1, notice there's 2 parts. At the top part, we have additional income on Schedule 1. We scroll down, Part 2, we have adjustments. And look at what adjustments are. If we look at an adjustment, it's going to tell you subtract. So adjustments are simple things that we are going to subtract from our income. So let's go to see what things can we subtract from our income. Ooh, excuse me, this coughing is getting crazy. So one, if you are an educator, you get to write off up to $250 of the amount that you spent out of pocket. Certain business expenses of reservists, performing artists goes there. Your health savings account, I think I talked about that a couple of weeks ago. If you contribute to an HSA, that gets us deducted from our income. Moving expenses, if you're in the armed forces, the deductible part of self-employment tax. If you contribute to a self-employed pension or some sort of retirement plan, if you have insurance and you're self-employed, the penalty on early withdrawal savings, all of these things here are what is considered an adjustment to income, meaning that it is going to subtract. Now let's go back to the 1040. So we have $100,000 of income. And here's the thing I want us to understand. What we're doing now is saying, okay, I'm starting with 100,000, but I want to reduce that number as much as possible, because the more I can reduce that 100,000, the less taxes I have to pay, right? Perfect. So any adjustments, we go here, but because we have none, we didn't do anything. I'm just going through. We have zero adjustments. I'm sorry, let me put that here. So we have zero adjustments to our income. So that means our adjusted gross income is going to be 100,000. We see that? So we start here, all the income. We just had a one W-2, gave us 100,000 for the year. We didn't add anything else to it. We added no other income to it. So that was our total income. There was no adjustments. We're not subtracting anything. So our adjusted gross income, when people ask for your AGI, that's what they're referring to, your adjusted gross income, line 11, that's what we start with here. Perfect. Now, we get to line 12, the standard deduction or your itemized deduction. Remember when we was up here at the top and we was trying to figure out, all right, what's going to be our standard deduction based on these boxes we checked? Well, we finally arrived here. And for purposes of this here, I want us to, let me blow this up again. Move it on over so we can see. When we look at line 12 opens up to a box here on the left-hand side, right? Let me get it so we can see it fully. If you are single, married filing separately, you get a standard deduction of $12,950. Okay? That's why I say when you are single, you pay the highest taxes because you have the lowest standard deduction. If you are married filing joint or qualifying widower, or what they have a qualifying surviving spouse, your standard deduction is $25,900. If you are head of household, your standard deduction is $19,400. Okay, so if you're ever confused about what your standard deduction is, just look over here on the left-hand side and you will see that number. Okay, now if you notice, it says standard deduction or itemized. Now this is for the individuals who own a home. Like if you own your home, then most likely you're going to itemize your deductions on the Schedule A. Now the goal, and then when we look at it here, we see it's an either or. You're either going to take what's given to you, the $12,000 in our case, because this scenario is single. You're going to take the $12,950 that's given to you, or you're going to itemize. Now, if you're going to itemize, your goal is to beat the $12,950, because that $12,950 is going to subtract from your adjusted gross income, thereby reducing all of your other income. So if you itemize your deductions and it came up to $5,000, it doesn't make sense. The standard deduction is higher. And of course, you want to take the higher number because it's going to give you the smaller taxable amount. So when choosing to itemize or take the standard deduction, do the comparison. Of course, always run the numbers, do the Schedule A, write your list of itemized deductions, see if it comes up to more than the standard deduction. If it doesn't come up to more than the standard deduction, then by all means, take the standard deduction unless there's a specific reason you want to just force the itemized, that can be done. You can force the itemized deductions if it's lower. There haven't been too many scenarios where I've seen it happen, but it is possible. But you do understand it's standard or. So in our scenario, I am going to put the 12,950 here, okay? Qualified business income, that's the QBI deduction, the 20% for our sole proprietors out there. We'll talk about that next week. So we have nothing here. So again, if you notice, it's simple. Add, subtract. That's all we see here is add and subtract. Nothing overly complicated. So we add lines 12 and 13, so that's going to give us 12,950. Now here's the great part, because this is the goal. Line 15. I want us to pay attention to line 15. That's the one we want. Why? Because line 15 is the amount that's taxable. We're not taxed on the gross amount, right? We're not taxed on line 9, the total income. No, we are taxed on line 15. What's left over after everything is said and done? And when we look at, we'll just basically, again, we're doing simple math here. We're subtracting 87, 450 is our taxable income. All right, we see that there. We started off with 100,000. Took the standard deduction, 12,950. Taxable income is 87,450 bucks. That's what we pay tax on. So now you can see based on that, and here's where tax planning comes from. Being sitting down with a tax professional, not just at the end of the year, but throughout the year as things are going, as things are progressing. You want to sit down because your goal as a taxpayer is to get line 15 as close to zero as legally possible. That's your goal. Excuse me while I take some water. All right, you see that? Your goal, I'm gonna repeat this, as a taxpayer is to get line 15 because that, oh, excuse me, because that is the number that the tax is going to be calculated on. Line 15, not line 1, not line 9, but line 15. So we want to get that number as close to zero as legally possible. And I say legally possible because there's a bunch of ways to do it illegally and it would only bite you in the butt. So don't do it. Now, if we look at line 15, see if it'll let me do it. I'm gonna have to reduce it a little bit because I want us to see both. It's not gonna do it. Okay, so line 15 immediately jumps down to line 16. And what is line 16, my good people? The tax, right? We can see it right here. Line 16 is the tax. So where does this number come from? And that's what I want to kind of show you real quick. Show you the tax brackets. Now, you can Google the tax brackets, and this is based on that number. So we saw line 15, and here's the tax bracket. So every year, the IRS releases tax brackets. And the tax bracket, this is what I want to understand about tax brackets. We are in a progressive tax system, right? Like we don't, how can I explain this? Line 15, that's your taxable income. That's the amount that the tax is going to be applied, but it's broken down into sections, okay? So as we can see, let me make it big again. Can I blow this up? I think I can, yeah. So here, your tax rate. So if your taxable income was $10,275, if line 15 was between 0 and 10,275 as a single filer, because that's what we're looking at for single people, is different for every single filing status, which is why filing status, choosing the right filing status is important. your income earned between, again, this is based on line 15. If line 15 is between 0, 10, 275, you simply pay 10% of tax. However, if line 15 is between 10, 276 and 41, 775, then here's the thing. It's going to be $1,027.50 plus 12% of the amount over the 275. I want us to really pay attention to this says here, the amount over 275. And this is what I mean by saying it is a progressive tax. It's a progressive tax. So let's say for this example, you made $41,775. That one was line 15. The first $10,275 is only going to be taxed at 10%. You're not going to pay 12% on the full 41,000. No, you're going to first pay 10% on the first 275. Then what's left over is going to be taxed at 12%. Right? Then we'll add those two numbers up to get our total tax. So a lot of people think, oh, I'm in a 12% tax bracket. It may not be. You may be in 11% tax, depending on how far you went through these brackets. So it's good to know that as well, especially if you want a micro plan like I do. I need to know every single detail, so I need to know my tax rate so I can plan for it. But we'll talk about that. So let's get back to it. So if your income is between 41 and 89, you're looking at 22, so forth and so on. The highest tax bracket right now is 37% tax. But that's if you are making, if line 15 is over $500,000. Now, I'll be honest with you. I'm waiting on the day that my line 15 is over $539.901. If you're with me, drop a money bag in the chat. Because how many of us would like to be in a 37% tax? That's what I say. We got to get a better relationship with taxes. For the simple fact that a lot of people want to be between 10 and 12% because they get that EIC, the earned income, right? They get that, the refund if they're between 10 and 22%. Well, I'm going to say 10 and 12 because the earned income credit, if you're making $89,000, it phases out. A lot of credits phase out after you go over a certain amount. So a lot of people, for tax purposes, on purpose stay between 10 and 12%, but look at your maximum earning on that. $41,000 a year. No, people, I'm trying to be here. I want to be at $539,901. Tax me all you want. I'm willing to pay 37% because still, even if it was 50%, $250,000 is way more than 41. People, please understand that we have to change our outlook on taxes because, you know, I ain't gonna mind paying taxes. And this, again, this is for somebody who's single. If you're married, so let's go down. Married filing joint, look at what the tax brackets go up to. 10%, your threshold is at $20,000. That's why I say single is the highest number. Because when you move up, then that number goes down. So notice the thresholds get further out. You can make more money and pay less tax, right? When you go up from the filing statuses. So married filing joint, their 10% cuts off at $20,000 instead of 10. So you have an extra $10,000 to play with to stay within that lower tax bracket. And let's go down to the 37. For somebody who's married filing joint, you can, man, an extra $100,000 to play with. Now, I'm not encouraging everybody to go get married just for taxes, but I'm just saying, you know, when you are married, the tax brackets favor you. Right? You get an extra $100,000 to play with, to keep, so to speak, before you had to get to that 37. But if we look at married filing separately, for whatever reason, IRS frowns on it, it's taxed the same as a single individual. There's a tax bracket for those who are married filing separate, right? Notice the tax brackets are the same exact for somebody who is single, with the exception of when you get into the 37,000, when you're married filing separate, it goes down. Because remember, at single, at least it was at 527. Married filing separate, 37% is now down here to 323. So for them high earners, married filing separate sucks. Okay. If you're head of household, notice it's in between single and married, because it's single is 10,000, married is 20, head of household is at 14. So it's still a lot lower than single. Okay, and the head of household, you have to have children. That's where you get the head of household from when you have a dependent. And even still, that 37%, that's beautiful, right? 539,000 that you get to when you're head of household. Okay, and here's what we're looking at for next year, our tax bracket. So when we're looking at this here is the 2023 tax bracket. So this is what's come January 1st. For those of you who want to plan, come January 1st, these are going to be the new rates that take effect. So you can be like, all right, I know if I make between this amount and that amount, this is the tax bracket I'm looking at. Let me make it big for you. Right there. So for single filers, it went up 1,000 from 10 to 11. Let's see, what's that, 37? Ooh, you get to that 578. That's the goal, y'all. Let's make a goal in 2023 to move our tax brackets up. How about that? Let's make that a goal for 2023. You know, look at what your tax bracket is now and move it up. Okay, move up your tax bracket in 2023. Let's definitely make that a goal this year. If y'all gonna make that a goal, let me know in the chat. We want to move up a tax bracket. I'm trying to move mine up to the 37% so I can be at this number here. That's just me. All right. Married filing joint. It went up a little bit there. So yeah, look, that's still over the 600,000. Married filing separately went up there. All right. We can see those brackets here. And again, I'm on nerdwallet.com. As a matter of fact, can I copy this and post this in the chat? That's one thing I'm gonna do, post that in the chat so we can see it. In case y'all ever wanna, I just put it in the chat right there so you can have that Nerd Wallet link to go look at these tax brackets and make your goals, people. Make your goals, move up in tax bracket. Look at this. So now that you know, you can plan. And I'm going to go back to the tax return. Oh, why y'all say we getting late? Let me hurry up and get back to these taxes. All right, so I done talked enough about the tax brackets. Let me get back to the tax here. So the individual here, the tax on 100,000, and I'm about to rush through because we're getting close to our time, y'all. I'm sorry, I was just talking and getting excited about tax brackets. So on $100,000, the tax on that comes up to $15,015. We're not adding anything from any Schedule 2. Again, Schedule 2, when we look at that, this is additional taxes. There's no additional taxes that we're going to add to, so that'll be 0. Then we going to, so of course, again, very simple math. We adding 15,015. That's the total tax. If there was like, so if we had dependents and it gave us credit, we would add that there, it would subtract from it, but we don't have anything. So when we go down to line 24, our total tax is going to be 15,000. Oh, I'm sorry. 015, right? Very simple math, nothing there. Now here is where it gets important. The payments. So based off $100,000, we know that our total tax is going to be $15,015. So here is where you can file the perfect tax return by planning, by the payments you make. This is where the withholding on the W-2 comes from. Your withholding should match what you owe. That's the whole idea of taxes. We looked at line 15, and it gave us a taxable amount. Based on that taxable amount, we've now arrived at a tax. And so we know, based on this amount of money, I only owe this amount of tax. Line 25A is what your withholding is. Throughout the year, you should have had withholding to cover that. So if you paid 15 in withholding, let me go down to total payments. I'm gonna just skip this because we're out of time here, and I want to be respectful of your time. Then guess what? When we either get a refund, because it's the goal, refund or amount you owe, we want these numbers to be zero. There is no refund, and we don't owe them anything. Why? Because we paid right here in the payment section, we paid them exactly what we were supposed to. Right? Like, pay your taxes, just don't leave a tip. Because if you leave a tip, you're going to get it back as a refund. Right? And that just means you overpaid. That's money you could have kept in your throughout the year to help you move up in tax brackets by making investments, by adding other things here, right? Because you're already a W-2. So if you would have kept that money, you could have had some, could have put it into some IRAs that grew, could have had some capital gains, other income from businesses and other things like that, other things to help us get into that that additional tax bracket, right? So that's how the tax return works in its simplicity, right? I'm trying to get to see. We start with 100,000, subtract out what we need to subtract out, the standard deduction or our itemized. We end up at the taxable income here. It goes down. We determine the tax. We looked at the tax brackets. Based on the tax brackets, this is the amount of tax that we owe. Then we come down to our payments. So if, for those of you who are trying to plan things out, the easiest thing I can tell you to do is look at your last year's tax return. This is the easiest way you can plan it to make sure that you don't owe them, they don't owe you. When you look at your last year's tax return, you're going to look at, put this up, you're going to look at your line 24, because the tax forms may change, but look for the line that says total tax. Write that number down. What was it last year? Then you look at your total payments. What was it last year? Did your total payments come close to your total tax? If the answer is yes, then you should be good. But how far was it? Because let's say, for example, I paid $20,000 for my W-2, right? Guess what? That means that I overpaid by a certain amount. And again, I know I'm going over, man. If y'all got to go, y'all got to go. But I definitely want to kind of get through this. 0.15 minus. So if that was the case, if I had put $20,000 on my W-2, my total payments would come up to $20,000. That means I would have a refund of $49.85. I overpaid the government by $4,000. And look at that, y'all. I gave them $20,000. They simply gave me. They didn't give me no interest back. They didn't give me no bonuses. They just simply said, "Oh, you overpaid. Here's your money back." I could have kept that money and did what, like I said, added to some other investments that would help me move up in the next tax bracket. Right? That's why I say I don't really too much like refunds, because that's what that represents. But let's say I would exempt all year. Yeah, people do that. Then instead of having payments of anything, I would have zero refund. I would then owe $15,000. Let me I would then owe that amount. Plus, if we look here, estimated tax penalty, because anytime that this amount is over $1,000, anytime line 37, anytime the amount you owe is $1,000 or more, there's going to be a penalty. And in this instance, I think the penalty came up to $271. Not much in comparison to the actual amount that we owe, but who wants to pay extra, right? So again, knowing how it flows, knowing how it works, your goal is to not owe, not have a refund, simply pay exactly what you owe and nothing more. And the way to do this Look at your past year's tax return. Look at what your total tax was. Okay. Look at what your total payments were. And you can see, was I close? If you were close, then go through your pay stubs and look at your year to date. If nothing's changed, if your amount stays the same, like if you know for a fact this year is going to be the same as last year, go through and look. See what that number is. Say like, okay, last year my total tax was $10,000. Nothing is changing, so I can expect that my total tax will be around $10,000. It may be a little less because they're adjusting the standard deduction for inflation. So the standard deduction is going to go up, which means your taxable income is going to go down, which means your tax is going to go down. But still, you have a starting number. You have your total tax from last year, looking at all the numbers, making sure they don't change. You look at that number, you're like, all right, okay, cool. Look at your most recent pay stub and look at the year to date and be like, does that year-to-date withholding, the federal tax withholding, because that's what that is. When we look at this, the federal income tax line 25 withheld from any W-2s, 1099s, right? Now, next week, we'll talk about the estimated tax payments for the self-employed. But when you look at your pay stub, you want to look at the federal income tax withheld. And if that number is matching your last year's total tax, then you're good to go. However, if that number is more, then hey, you paid too much and you need to go and adjust your W-4, right? There's all kind of calculations that we can do for that. If you pay too little, expect to have a balance due. Expect to pay, okay? And this is for somebody who's single. If you have children under the age of 17, then, and your income didn't take you out of the threshold, and you can definitely expect to get some child tax credits, right? If you're married, right, the standard deduction is going to be a lot higher for you, so you can definitely expect to have lower taxable income. But that is the gist of your tax return, okay? The goal is to not owe them and not have them owe you. And we're doing that by looking at the tax return. I know I ran out of time, but I'm gonna be on here because I want to know if we have questions. Let me know because I did rush through it. Obviously, it takes years to really understand tax return. I kind of ran through it in like 20 minutes, hoping y'all understood, y'all got it. Next week we're going to cover the Schedule C, right, for our sole proprietor DBAs and even our single member LLCs. We'll cover that next week. But real quick, let me check something because Tim said he put that link for. Oh, here we are. It finally came through, Tim. Let me see this. If I can copy the link address. All right, so I got the link. I'm about to post that in here as well for Monday. For Tim and I to go live, that is now inside of the chat. You will see it there. Boom. And he gave me an image too, so let me see if I can open up the image here. Yeah, there it is. Tim did the artwork on this, y'all, so, shout out to him here. We're going to be live, Financial Freedom, bringing tax questions. Tim and I, hosted by Cash, live in 2 days, December 12th at 4 p.m. I think that's 4 p.m. Pacific Standard Time, 7 p.m. Eastern Standard Time right there. So, yeah, that's the time. The link is there. Should be in the live stream, so you can have it and be good to go. All right, so I saw some questions come in. I definitely want to get to the questions before we go and get to it there. So let's see here. See, hey, talking about we for that goal. Yeah, Zach, talking for the goal. So we moving up the tax brackets. Yes, that's what I'm talking about. Man. Hey, he dropping bags. Yeah, that's another one. Like, we got 2 people committing to moving up in tax brackets. That's what I'm talking about. Make it 3, because I promise you, I'm trying to move up in tax brackets. That's what we're talking about. Great question says, can you write off education coaching courses? Well, here's the thing. Most of your, let me back up, because tonight we was talking about the scenario of an individual who's not self-employed, but a W-2 employee. So, as of right now, individuals who are W-2 employees on the federal side cannot write off any unreimbursed employee expenses. We used to be able to do that. Trump took that off the table. I think it's suspended until 2025. But as of right now, on the federal, and I say this on the federal side because federally, if you are a W-2 employee and you're paying for courses to help your keep your job or further your job, you used to be able to write it off as an unreimbursed employee expense, but that's been suspended on the federal side. And I say that because there are still certain states that will still allow you to deduct it. So always give it to your preparer anyway, because it may not count federal, but it may still count on the state, and it can save you money on the state side. Okay? So that's for a W-2. If you are self-employed, and like I said, we're going to talk a lot about this next week. If you are self-employed, if that coaching course that you took, if it, how could I say, added to you, like if it was teaching you how to do your job, if it was like a training or something like that, then by all means, 100% 100% deductible all day. Absolutely. Okay. So yeah, go for it. Especially for education, do things like that. Definitely good. Okay. Let's see here. I want to make sure I got everybody. Ms. Brown, I appreciate you. I rushed through, so I'm glad to know that I did a good job in rushing through, trying to explain this tax return. Hopefully, it helped somebody understand their taxes, because with taxes coming up, like, look, we are already in December. It ain't too much you can do now for next year. But starting January 1st, you now know how taxes work. You want to look and see, what am I projected to make? Am I going to pay this? Am I going to meet my target? What tax bracket am I going to be in? How to read the tax brackets and go forth and so on. So, indeed. All right. Well, I am 13 minutes past time. I apologize. Did not want to be before you this long. I appreciate those of you who hung in here with me, who watched and went through everything. Hopefully, we got the link. It's in there in the chat. See everybody Monday, 4 p.m. Pacific Standard Time. If not, see y'all next Friday when we talk about being self-employed. And we go from there. Remember, check in on the people you haven't spoken to in a while. It's a lot of joy happening this season, but it's also a lot of sadness and unhappiness happening as well. Check in on people, making sure they're good. Just simple, hey, something to be good to go. All right. And so that's it for me, guys. I ain't going to go through the usual spiel. But yeah, hold on. One more question. I rarely use mileage, but even for your gas, Ms. Brown, and we'll talk about this more in depth. Hopefully we have enough time, right? Because even for your gas, you still have to track the miles. We can't escape tracking miles when we're self-employed. And the reason that is because the IRS wants to know, okay, well, if you spent $100 in gas, how much of that gas usage was business, how much was personal? And the only way to get those numbers is to track the miles, right? So even though a lot of people say, well, I didn't track my miles, I'm gonna use gas. Well, I still need to know the miles to determine how much of that gas can I use as a deduction, okay? So that's why I said, on your phones, on your calendar, put something on your calendar, come January 1st, write down your odometer reading, all right? And I'll remind y'all that of next week. But fam, I appreciate y'all being here. That is it for me for tonight. I'm going to go ahead. Zach, give me 30 minutes. I'm about to shoot that email to you. You'll be good to go. Folks, you got the link. Hopefully y'all can time in with me and Tim on Monday as we go live, talk more about tax stuff. Bring your questions then. I'm sure, they'll be more than happy to make sure your question get answered. I've set a time the rest of my day for that, so I'll be there all day for that community. But again, know that I love y'all, man. Check in on your people. Show love, spread love this year. Get ready to move up to the next tax bracket. And I will see y'all next week. Peace.